Just a quick intro on myself. My name is Brian Stark. Been with Traction since day one of the co-founders of the company. Before that, I was with FarmWorks Software for many, many years back in the early 1990s. Helped with that software, and that was mostly desktop-based software, but it was using similar sort of tools of what we have in Traction today. But that's a little brief history about myself, also from a small family farm in Northwest Ohio. Karen, I'll let you take it from here.
Awesome. Well, good morning, everyone. My name is Taryn Hodgson, and I am the Customer Engagement Manager here at Traction. I've been with Traction for a little over 2 years now. And my role is simply just to work with customers, get them onboarded, get everything set up, and work with customers to kind of understand what they're needing for the platform. A little bit about my background is I came from public accounting, went into the ag co-op space for a little bit, went back to public accounting and realized I did not want to do taxes for the rest of my life, and then found Traction. So today I will kind of talk about some things that can kind of prepare you to kind of go to your tax accountant, things that will help you kind of clean your books up, have you ready, things that they're going to ask for. Like I said, just so you're prepared, whether that meeting is happening here at the end of the year or next year before taxes start to get filed. A couple of things I will be going through today is kind of discussing account reconciliation, reviewing any of your loan balances that you may have, what happens if you purchase assets and what you should do with that, any uncategorized transactions that you may have, miscellaneous transactions you have in Traction, financial statements that you should be pulling, and then kind of a quick discussion on 1099s within Traction. So I'll pull up my demo account here. So one of the first things that you'll want to kind of do before you head to your tax accountant, or generally, whether you do it monthly, quarterly, or at the end of the year, is reconcile any checking accounts, line of credits, credit cards, so that you know that the balances that you have within Traction tie out to either the bank, or you know if it doesn't tie, any of those checks or deposits that have not cleared that may be in Traction that haven't hit the bank yet. So within Traction, you can see if you do have a bank feed, I'm not going to have it in here. Let me go to one of mine. If you do have a bank feed within Traction, you obviously will have this little refresh button, so you'll know that you have a bank feed, but any transactions that have cleared the bank, if you are within your account register, the status here will say C. Once you reconcile those accounts, that status here is going to say R. So you can see here I have these two checks that do not have a status at all, so that means I would have put them in manually. So once it comes to reconciling, if you are in the reconcile tool within Traction, you can pick the account that you want to reconcile. If you have reconciled it in the past, you will see that there is a previous reconciliation report that you can pull. But then here, this is where you would put in the ending balance according to your bank statement. So I'm just going to make this up. This will just be an estimate. Once you hit start reconciling, this is just telling me I haven't reconciled it in a long time. Any of the checks that have cleared, have that status of C, are automatically going to be check marked within this reconcile tool. So you can see the two checks that did not necessarily clear the bank are not check marked here. If you do not have a bank feed within Traction, or you do not import your transactions from the bank and you just manually put in those transactions, all of those are going to be unchecked. And so you'll want to go and, like, according to the bank statement, come in and check mark any transactions that have cleared on the bank statement and are here in Traction. You would hope that at the end of the month or quarter, how often you're reconciling, this difference is going to be zero. If it's not zero, that means that there's something that's missing that cleared the bank that you do not have in Traction, or you've checkmarked something on here that is not necessarily on that bank statement. You can, when reconciling, say there is something missing. You can save the reconcile for later. You can edit the balances if, say, maybe you put in the incorrect ending balance. That's always possible. The credit cards are going to be exactly the same way. So if you are reconciling those credit cards, it's going to look just like you would with a bank account. Another thing would be reconciling any lines of credits. So if you do have an operating line of credit, um, I would recommend reconciling that as well, just because there are, depending on how your line of credit works, those transactions that are coming and going, it's best to tie out to make sure that whatever the bank is or who the lender is with your line of credit, that ties to what you have in Traction as well. Like I mentioned, you can always repull that reconciliation report within Traction, if I can find the right bank. And this will show so you can see I'm out of balance by $100. So what I had in the bank, what I have in the book, there is a $100 difference. So I kind of want to see, okay, what am I missing that is incorrect? You also see if there are checks or deposits that have not cleared and they are outstanding. This would be a good opportunity to see, okay, did I accidentally put this in Traction and it shouldn't be in Traction? Is it a duplicate? This is a good way on this report to see those transactions that maybe shouldn't even be there. So after reconciling, kind of clearing everything out, making sure everything is tied, one other thing I will mention is if you are reconciling, say you reconcile your books through 12/31, if you have a fiscal year of 12/31, say in January, you have a bunch of checks that you wrote at the end of December, but they do not clear until January. You'll want to be sure to go into your account register and backdate those checks so that those expenses or revenue can be recorded in the 2025 year. A lot of times when you have the bank feed within Traction, the date that the check clears will be the date that it's posted in here. So if I'm writing a bunch of checks at the end of the year, I'll want to be sure to change that date at the end of the year. So then when I do my January reconcile, I can make sure that those checks are in the proper year and where they need to go. Another item that is important to kind of tie out and make sure everything is good to go is any loan balances. So if I have, let me expand this, get all of my entities check marked here. So not only my credit card and any line of credit that I may have, I will probably want to tie out to make sure any of the loan balances that I have on the books are actually the correct loan balances that I have with either lenders or if I've loaned money like a notes payable, notes receivable to anyone else. I want to make sure that those balances are truly correct. A lot of times with like long-term notes, say you're paying off equipment, you'll want to tie these balances out because the majority of the time, when customers make payments to those notes, they simply will take the payment directly back to the principal and may not include interest. So if you're tying out those balances to maybe what John Deere Financial has or any of those lenders who have given you money for any of those loans, you'll want to be sure that maybe you need to record interest. So by tying out these balances to what those lenders have, this will give you an opportunity to see, oh, okay, well, this balance may be off because either, I don't know, maybe I missed recording a payment the right way, or I need to make a journal entry to the interest expense account. This is just a good way to kind of make sure everything is tied out as well. If you do need to make journal entries for these loans, interest journal entries, recording a journal entry in Traction, there is this new button within your chart of accounts in the upper right-hand corner. If you select that and select a journal entry, this will give you the opportunity to pick the accounts. So if I had my liability account, and then I had my interest expense account, and I needed to, I don't even have that set up. And obviously you can set up those accounts within here if you don't have it, but this would be a good opportunity to do it within the journal entry to record interest and put that to the accounts that it needs to go to. If you have throughout the year, maybe you have purchased a new piece of equipment and you have received a new loan, you'll want to keep the documentation on that. Your accountant's going to ask for that documentation for maybe any assets, but then also proof that they're going to want to tie out the balances at the end of the year with that documentation as well. That kind of leads me into the asset part of Traction. So if you have purchased equipment or land or any assets throughout the year for your entity and have recorded those within Traction, this is also a good opportunity to note that you'll want to take that documentation to your accountant. Because what they'll do is they're probably going to put it on your maybe asset detail sheet and then start recording depreciation. So then at that point, they're going to know, okay, this is the life of this piece of equipment, for example, and they're going to know what that depreciation is for the life of that piece of equipment. So they're going to want proof of that, maybe a proof of purchase, anything that can be considered an asset and depreciate, they're going to want documentation of that. If you have sold, so maybe you've traded in a piece of equipment, sold a piece of equipment, whether you've recorded in Traction or not, they're also going to want any documentation or proof of that. If there is an instance where you have purchased equipment in Traction or you've traded equipment in or sold it, and you do need help kind of recording that journal entry or figuring out how that needs to be recorded, please reach out to us, the success team. We can always work with you in getting those transactions set up. Can be a little bit confusing kind of putting it all into one entry, but we're here to kind of help you get those recorded and set up as well. And the same will go for depreciation at the end of the year. If you do need help making that accumulated depreciation journal entry, we're here to help. We can kind of help you walk through setting that up and getting that recorded on your books if your accountant is choosing not to make that journal entry themselves. Any questions, I guess, on kind of reconciling, tying out loans and equipment, or any of your assets, handling assets within Traction? A couple things with assets within Traction. If you're kind of newer to Traction this year and you haven't added any of those assets, that obviously is going to go under this property and equipment section. We do recommend kind of consolidating your assets as much as possible, only because with adding equipment, for example, it will make an accumulated depreciation account for each asset account that's created. So if I did put in each individual piece of equipment into Traction on the accounting side, it will make a separate accumulated depreciation account. So at the end of the year, if you had all of those pieces of equipment split out, you're going to have to hit every single one of those accumulated depreciation accounts, which could be very cumbersome. But just remember that if you have the Plus or the Pro plan and you need to add those pieces of equipment over to under our operations side, you can enter those individual pieces over there, but then still have your assets recorded like they should be properly. If you don't have your asset balances put in here, you can simply create those accounts and then update those accounts by adding those balances. If you've created the account, just know that you can come in and edit that account and you can add those opening balances for the year into this same section. And you can edit that at any time. So if you already have the account created, you can kind of just keep going. The other part I will mention is owner's equity. So a lot of times customers, whenever they start with Traction, they're going to start putting in their bank accounts or checking accounts and then credit cards and long-term loans. And you'll notice as you kind of start putting those numbers in, there will be, I'll call it consolidate this a little bit so it looks a little cleaner. There is going to be this opening balance equity account. What this is simply just a formula. So it's taking your assets minus your liabilities and saying, okay, this is what the equity should be. As you actually enter your equity balances into Traction, this number is going to change. So at the beginning of the year, you should simply want it to tie up. This should really be zero because your assets minus your liabilities should be the equity balances within Traction. So you can see here my equity balances that I have within here. I haven't truly put in what the actual equity was for this operation. So once I did change those numbers, this opening balance equity number would change. If you don't know what that equity number is, if you reach out to your tax accountant, they should have that maybe within a spreadsheet, maybe on a prior year balance sheet. They're going to have those numbers because they will tie out to that number each year to make sure it has moved and fluctuated from year to year correctly. As I kind of push through, as you kind of work through these balance sheet items and you kind of work more towards your income statement items or your profit and loss items, your revenue and expense accounts are going to be a good opportunity to kind of quickly review to make sure things or transactions are kind of put into the correct account, if you will. So if I'm looking at revenue, I'm kind of just confirming, okay, yes, this is where my revenue needs to go. If you need to move some of those transactions, this is a good opportunity to kind of edit those transactions and move them to the correct account. This also gives you an opportunity to come and review, say you have miscellaneous transactions that are sitting in a miscellaneous account. You'll want to kind of review those and see, okay, can I move those to a revenue account or expense account that I know it needs to go to? Or if this gives you an opportunity to leave them out there to ask your accountant, just know that they're there and your accountant will ask about them. Also within Traction, any transactions that you have not assigned to an account within your account register automatically go to uncategorized. So for this example, you can see in my uncategorized revenue account, I have $726,000 worth of transactions that I need to assign. Once I go and assign those transactions to their proper account, that's going to go away. So just like having a miscellaneous transaction, you'll want to kind of go in and code those transactions to where they need to go. The same is going to go for expenses. So this at the end of the year, it's kind of a good opportunity to review your expenses, where they have gone. Are the accounts correct? Do you need to move anything around? Just kind of a quick check before you kind of go to your accountant and they kind of start glimpsing over all of that stuff and confirming that those balances are correct. As mentioned, if you are in Traction, I'll go down to this uncategorized. If I do go into any of these expense or revenue accounts and I need to move some of these transactions to where they need to go, if I simply just click within the transaction in that account, you can edit that transaction here directly. So you don't necessarily need to go back to your account register to find that transaction and then code it to the account that it needs to go to. I will say, like, if you do have any transactions that are sitting in miscellaneous, try to clear those out as much as possible. Accountants don't really love transactions sitting in a miscellaneous account just because they can be assigned somewhere. So clean those up as much as possible, just so you're ready and have them going to where they need to go.
Taryn, I think we had a question through here for you that
Yep.
deals with the chart of accounts.
Yep.
Going back up to the assets for the farm machinery account,
hmm
um, is there a place to list the machine inventory?
Yes.
And would you do it here or do it somewhere else?
Yeah, so kind of how I mentioned, if you are adding your machinery within Traction, under this property and equipment section, if you add all of those pieces as a lump sum, you're going to have that total here. But then over on the operation side, if you come to equipment, you can add those individual pieces over here. If you do have the Pro subscription within Traction, if you're adding a piece of equipment, Plus users do have the ability to add all the equipment and add a default cost. If you are a Pro user, you can again add those individual pieces, but you do have the ability to toggle on this ownership cost. Here is where you can kind of enter all of that individual information for those pieces of equipment. So if you wanted to put the purchase cost and all of the values for those, this is where you can pull those pieces of equipment into a market value balance sheet. So regardless, if you are any user in Traction can add equipment. Um, but if you want to add more details, you can. You do have the ability to add all of those details for those individual pieces over on the operations side under equipment.
But that was the only question I see so far, Taryn.
Awesome.
And
Okay.
that is a good question because, you know, I know you've done a lot of onboarding for farmers and we've seen a lot of traction accounts. They
Mhm.
try to add all their individual machines in the chart of accounts as separate accounts, and that can get kind of hairy if you do it that way.
Mhm. And I will say, and all accountants can be different. Like generally at the end of the year, they're going to pull an asset sheet that they have within their system, and they're just going to tie out those numbers that are at the very end, like that whole total number. They're not generally going to go line by line for those individual pieces of equipment because those individual pieces of equipment could have been on the books for 10, 15 years and they know they're there. They're just going to confirm if that asset number has changed, what was purchased or what was sold, and kind of account for that and just tie that number out as a whole instead of going through each individual piece that you may have within your operation. The last couple parts of things that kind of you can start thinking about as the year comes to an end is within Traction, you do have the ability to process 1099s. We do partner with Tax 1099, where you can basically create your 1099s within Traction, and you can push those 1099s over to Tax 1099 to get those created, whether you create a spreadsheet so that you can give to your accountant so they can create those 1099s, or if you want to process and file those 1099s within this tax 1099 system, you do have the ability to do that. We are kind of working on getting that set up a little bit as we're coming to the end. There should be a release, I believe, this week on an update for that tax 1099 option. But if you are in accounting under taxes, if you select this IRS Form 1099, this is where it will take you and you can start creating those 1099s from Traction and push them over to Tax 1099. We will be having a couple webinars about that here in January, kind of how those get processed and how those can be created. If you do have questions on that, I know that there's a couple of knowledge base articles on how those are processed, so you can always check that out. But we do have the ability to create those. I will say, depending on how your tax account works, processing those through Tax 1099 is quite a bit cheaper in filing those through there. So depending on how you are charged by your tax accountant, it may be a little bit cheaper, save you a little bit of money to process those yourself. If you don't, like I said, if you don't want to process them through Tax 1099 and you just want to get a spreadsheet for your accountant to create those, you do have the ability to do that when you push them over to Tax 1099, which we will talk about here kind of in January. The last part is kind of preparing to bring reports to your tax accountant. So a lot of times your tax accountant is going to want a balance sheet. This is what they're going to tie out all of those loans to. They're going to tie out your bank reconciliations to make sure what you have on the balance sheet is actual to what the bank is saying. An income statement, obviously, or profit and loss, as some people call it. They're going to want proof of this so they can kind of tie out and see what that looks like for the year. General ledger detail, a vast majority of the time they will want this as well. This is basically going to show where each transaction in your checking account has gone through in what to what account it has hit. So you can see it's going to pull up each account that I have within Traction and show each transaction that have gone to that account. Generally, if your accountant is looking for a transaction, they're going to look in this general ledger. If they don't have access to maybe your accounting software or access to your Traction account. Family living, if you do use the family living option within Traction, say you code your transactions to the draw account and you categorize those transactions to family living and create those categories, pulling this family living report for your accountant will show, and it's not going to show, I don't have very many coded there. It's going to show you what you have drawn from your farming operation, and maybe there's an option to maybe move some of that money back and take it back to the farming operation. If they do want to see those bank reconciliation summaries, those are here as well. And then if you have made journal entries throughout the year, I recommend pulling that journal entry report so they can see what journal entries you've created throughout the year. These are all available if you are in cash basis. If you are accrual basis, there is the balance sheet as well. If you are accrual basis, this will be super helpful. Be sure to pull this balance sheet for them. Because with the accrual basis balance sheet within Traction, there is a supporting schedule down below. So this is going to show you and tie out all of your accounts receivable. If you have prepays still sitting on the books, your accountant's going to take a look at these and make sure that they tie out to, say you still have this outstanding, maybe it needs to be moved. Do you need to spend some money at the co-op? This is going to confirm with them those balances. It's going to show all your assets such as chemicals. Maybe you have crops still on hand. It's going to have those balances there for them to see, to tie out, and to kind of review here at the end of the year. Another last one will be the Schedule F. So because Traction does produce the Schedule F, you do have the ability to pull that report. They will enjoy this report if you pull that and give that to them. With any of these reports, they may ask you to basically pull the reports for the year, obviously, but they may also ask you to pull the reports for prior years. So within any of the reports with Traction, you can change the dates, the as of date, and you can export those to Excel or print them to PDF for them to review. You can also, if reports need to be consolidated within Traction, you do have the ability in all of these reports to check mark any entities that you may want together. You update the report and you can have those combined and export how you choose. Any questions? I guess that's kind of an overall review of things you can kind of prepare for, what you need to pull, what accountants may ask for. If your accountant does want to have access to your attraction account, there is a possibility that they can have that. If you simply reach out to the success team or your account manager, we can grant your accountant access to your account, and they can see all of the same stuff that you're seeing. When granting access to your accountant, we kind of set them up for their own little demo trial account. So they can go in there, they can play with their own account, they can switch to your account if they choose to, but then they have the ability to basically, if they have other clients that do use Traction, they can flip back and forth between their clients within Traction without you knowing or seeing any of the other information. Awesome. Any questions? That's kind of a wrap on most of the items that you'll need within Traction that your accountant will generally ask for, or you can kind of prepare for.
All right. Thanks, Taryn, for all that information. Yeah, like she said, if there's any questions, feel free to unmute yourself or use the chat. Now's a good time to ask away if you have any questions on any of the material that was covered. We got a quiet crowd today, Taryn.
It's early in the morning.
Yeah. All right.
Awesome. I'll kind of flip back to this.
Yeah. Actually had a couple of questions come through here, Taryn.
Perfect.
Could you explain the journal entry one more time?
Yeah, absolutely. So let me go back up here real fast. If mine will load. Okay, so I think let me add my interest expense account real fast to Traction. I can kind of show you that. I'm gonna add an account real fast. Scroll down here. Maybe.
Correct me if I'm wrong, Taryn, but would this also be a great place to put in your depreciation expense at the end
Yeah,
of the year to kind of do that?
yes.
If you're looking at your machinery equipment, you're trying to put your accumulated depreciation for 2025 in.
Yep, no, absolutely. So before within Traction, the journal entry feature is newer to Traction. So before within Traction, a lot of times customers would come into a payment and to move things from one account to another, they would add one account, make it positive, add a row, add another account and make it negative. Now you don't necessarily need to do that within Traction because we have the option to create a journal entry. So under that chart of accounts, if you hit this new button and you select journal entry, this is where you can come in and basically move transactions from one account to another. So we'll use my equipment, for example. Maybe let me change my entity. That'll help. So say I have an expense account, for example, that I need to move transactions from like balances from one account to another. So say I coded some values to my chemicals expense account that actually needs to be moved to fertilizer because I bought a bunch of product from Nutrien, for example. So what I can do here is say that I need to move transactions from one account to another. You can see over here our balances. Once I know how much money I need to move from one account to another, so for chemicals expense, for example, I'm increasing my expense account by $10,000, but I also need to take it out or add it to another. So here I'm going to credit the opposite account. So you can see those balances are changing. It's not going to affect your checkbook at all. It's just basically moving those from one account to another. So this is how it would also happen at the end of the year, what you'll do with depreciation, kind of how Brian mentioned. So if I do need to change and adjust my depreciation for the year, um, I am going to take that back to a depreciation expense account. So if I needed to increase or decrease that depreciation, if I purchase assets or those assets are depreciating, this is where you're going to come into this journal entry to make those adjustments. Or if you aren't doing that, your accountant will come in here, and this is how they would create that journal entry and post that to the books.
That memo area in the very top there is pretty important. Maybe add some notes there about what you're doing.
Absolutely, because when you do post this journal entry, it will show up like in your account register as $0. So a lot of times in this memo, if you do like depreciate end of year depreciation entry for this example, then your account will know maybe next year what that transaction was that was posted in there.
Yeah, good deal. Had a question from Tim. Is this being recorded? Yes, we're definitely recording it. We will share it with you afterwards. Might need to give us a few hours to do that, but you'll
Yep.
definitely get a recording today on the webinar. Another question, when a piece of equipment gets totaled or destroyed, do you just delete that equipment out of your list?
Yeah, so okay, for on the accounting side, you'll obviously make the transaction, the entry so that you're removing that piece of equipment. So if I had a tractor that was for $15,000 on my books, say I sell it, it's no longer in use, maybe I get rid of it. You would remove that 15,000 from that asset account. But over on the operations side, if you have that piece of equipment out here, say you're never going to use it again, you can view the details on this piece of equipment, edit that piece of equipment, and then come down here and inactivate it so that that piece of equipment will no longer be out there on your list. If you haven't activated it, you can always click this show inactive equipment and it'll show you, okay, this piece of equipment is no longer on the books. But it's still kind of sitting out there if you have had history, like recorded transactions to that individual piece. Great question.
Yeah, and that's a great tool there, that show inactive button. If you need to bring it back for whatever
Mhm.
reason, if you accidentally click the dreaded red button, inactive button, you can bring it back to life if you need to.
Yep.
All the history is still there when you inactivate a machine, so there's no worries about your field records and if that information is going to be gone or not. It's definitely there in Traction.
Yep.
Paul says thank you on the journal entry info.
Absolutely. Yep.
Good questions, everyone. Is there any other things on your mind right now?
At the end and after the end of this webinar, there will be like an email going out afterwards, and it will also include a checklist of items that we kind of discussed today. So you kind of see that visually of and think about things that maybe you should kind of work on before the end of the year. So you know, and it's exactly what we kind of discussed today. And if there are questions afterwards, feel free to reach out to us. We're here to help and get anything you have answered.
Yeah, kind of forgot about that, but yeah, there's a PDF file actually, so you can print that and hang it up somewhere in your office. It's a nice reminder. Yeah, so just to kind of close it out here today, so we have some other webinars. We are starting to really crank these up. We're getting a lot of interest in these webinars, so we don't want to stop the momentum. We added two new ones yesterday. Now, at the moment, you cannot go to the website and sign up for these, but I'm hoping in the next couple of hours you'll have it up there so you can sign up for the market value balance sheet on December 18th. And the budgeted cash flow, which is a newer feature that was launched last month. We'll tackle that one after Christmas. So there'll be a couple opportunities there. Taryn mentioned the 1099, so she'll go much more in depth on how that works, how you do that, get ready for those 1099s for the 1st of February. And all these webinars, you can go to our website. I believe at the very bottom of the footer, there's a place where you can click on events, upcoming events, and you'll see the list of the webinars up there. And these are all free. We love them. We love to hear the feedback and things. It helps us even improve the product and make it better for you, which is what it's all about, is hearing your comments and feedback.
Absolutely.
Other than that, I know we had a mix of existing customers and people that don't have traction yet. And so I'll just put my last plug in for the people that don't have traction yet. I've been at this for so long, for so many years, that this is truly the best time of year to get things up and going for 2026. So if you have not started a trial yet, I highly recommend that you do. And the team is willing to work with you and get that trial up and going and get it ready for 2026. Now, I'm not going to stop you from doing 2025 records if you really want to go back and put 12 months of records in. All the power to you if you can do that or have time to do that. But really, for most of you that just starting from scratch and are interested in what we're all about, it's really, the best time is now. It is really truly now is the time to kick it off, get your chart of accounts, as Taryn mentioned, get it set up right and get things ready to go for the new year if you are a new person to Traction. So that's all easy to do on the website. Just go to tractionag.com. You'll see the free trial button up there to kick things off.
Absolutely.
Yeah, any last questions for the attendees today? Okay, we'll close her down. Appreciate your time today, and we look forward to seeing you at a future webinar.
Thanks, everyone.
Yeah, thank you.